Hello there, welcome to our series on economic insights. My name is Audrey Whittington, and today I'll be talking with Danielle Hale, our chief economist at Realtor.com. And we're going to be talking about flow of funds. So I certainly have never heard of what the flow of funds is, so probably not a lot of consumers have. What exactly is the flow of funds?
So it's a big, basically, accounting identity. It's how we track all the money that's flowing in and out of the U.S. economy and who has it and where it's going. It's important for someone tracking the housing market because it looks at balance sheets of households. And on the balance sheets of households, we're measuring things like their net worth, so how much total wealth they have. And that's especially important because a key component of that is housing equity, the total wealth that people have in their houses, and also the total value of real estate. So housing equity is basically the total value of household real estate less their mortgage debt. Because mortgage debt is money that you owe to other people. But equity is that piece of your housing wealth that's yours, you don't owe to anybody else.
So we're measuring our equity in our homes.
Yep, that's it.
And so we're looking for more equity, obviously, and more equity is probably good for the economy. Can you talk about that?
Yeah, more equity is great for homeowners because it's basically wealth that they can tap into. They can use that money to invest. They can access it via home equity loans or lines of credit, possibly even refinancing. And it's great for investing, either starting a small business or maybe using it to borrow to get an education or help your kids go to college, or making home improvements. That's another common use of home equity. It was the case during the previous housing boom that people would tap it and use that money for consumption. That's not necessarily an advisable practice because you can tap into that equity, but as long as you want to continue to live in the home, you are going to have to pay it back. So that's something to think about when you're using that money.
That makes sense. And who compiles this data?
So it's compiled by the Federal Reserve, and they track it on a quarterly basis. And we've got a pretty long history going back, so we can compare over time. And something that we find when we look at it over time, we find that we're at record levels of housing equity because housing is valuable. Prices have run up, and that has increased the total value of housing now relative to previous periods.
Is there ever a point where we think the flow of funds might be too high, that the equity is too high? Is that anything we worry about? Or the more it goes up, the better it is?
Yeah, I don't think I think going up is always a good thing for homeowners. Now, an interesting aspect of that question is we're at a point where the homeownership rate now is lower than it was in the past. So rising home equity is great for those homeowners, but for renters, they're kind of missing out. And prices are rising, making homes more expensive and a little bit more difficult for them to get into the housing market. So I suppose if you wanted to look at the downside of increasing home equity, that would be it.
Yeah, so how often does this statistic come out?
So it comes out quarterly, so it's not the most frequent data that's out there, but it's also another data point that doesn't move very drastically. So it's pretty gradual increases that you see over time.
When are some of the periods that we've seen it be really low versus really high?
So during the last recession, we saw the value of real estate fall. So home prices were falling pretty dramatically, and that was picked up in the flow of funds data. The total value of real estate fell, as did the equity that people had in their homes.
Right. So right now we're doing pretty well.
Yeah.
So renters really should go ahead and buy because it's a it's a good investment, really.
Yeah, I mean, it's definitely a way to build up your net worth by, making you build up equity by seeing the price of your home appreciate. That's one way. But the other way is by paying down your mortgage. So every month you're contributing to the principal on your mortgage, and that's basically putting money in your pocket for the long run by building up that home equity.
I think that's a great point to land on because I don't think people always realize that they don't always have to see an appreciation in the market. If they pay down their mortgage, they're really making money as well.
Yep,
so,
absolutely.
Cool, I appreciate it. That was an interesting one to learn about. So thanks for watching this video. If you enjoyed this video about economic insights, we have others in our series, and we'll hope you'll join us with Danielle Hale, Chief Economist at Realtor.com.